Great. And I think it's exciting having everyone again for TechBiz series for this month. I mean, I've looked forward to having us back in so that we can look at the issues around the business of running tech. And again, my name is Victor Gbenga Folabi, the founder of Eco Innovation Center. And it's a privilege to have every one of you log in across all our platforms from LinkedIn to Facebook and all the other streaming platforms this evening. Okay, TechBiz is one of the platforms being promoted by Eco Innovation Center, whereby we bring in subject matter experts to our platform to see how they're able to share from their wealth of knowledge and experience nuggets that can help our ecosystem, help our people in our platforms and in our working groups to be better at what they do, to be better at running the business of tech, to be better at running their startups, to achieve scale up, to achieve commercialization, and be able to accelerate. And that's why that's the aim of TechBiz. Of course, basically, it's providing the required handholding, which our ecosystem needs and desires much more than many other things that we talk about. So today again is Thursday. It's another evening, and of course today we're talking about due diligence, which and I'll run her through the presentations very soon. I have a speaker who is trapped in a logistics challenge, and I hope he'll join us in the course of this presentation. But I think we just need to keep rolling, sharing the experience, taking the questions, and then we can move from there. This is the 89th episode of TechBiz, and in the last 2 years, we have brought TechBiz to you and brought it to your to the comfort of your systems. And basically, we have tried as much as possible to get the right facilitators that we think can bring value to you. For all the previous episodes, over 89 episodes of TechBiz, you can find them on our website, www.ecoicenter.com/TechBiz webinars. And you can see all the recordings, you can see all the sessions we've had, from how you use the strategy canvas to set up, to due diligence, to issues around investment readiness, to issues around doing things around term sheets, to how to raise funds, to market your products, and building a platform with an app, and quite a number of topics that ideations and driving innovations that we think can be very beneficial. So feel free again, as my colleagues drop the link into the chat room. Feel free to click the link and at your leisure download any of these, and you can as well watch any of the sessions that have been there. The other thing which we think I find a lot more exciting, much more than even the session that we have in TechBiz series, is the TechBiz Nation. And it's a gathering of over 1,000 startup entrepreneurs and technology enthusiasts who come together on Telegram. And what they do on Telegram is we share opportunities, access for grants. We share challenges, conversations, opportunities around running technology companies, around startups, around opportunity for scale up, around accelerators. And it's a community that just provides the right support structure for you as a startup, or you as a tech enthusiast, or somebody who is even aspiring to come into the tech space, to work, to perform, or anything that has to do with business of technology. The Tech Nation is a Telegram page that you need to join. I think as of today, we've got over 1,000 members in there, and you have to be there. I mean, for on the spot, right opportunities, investments, grants, whatever it is you're seeking around the tech ecosystem, the TechBiz Nation is where you need to be. So the link has been dropped in the chat room. Please feel free to join the Telegram page through that link. Okay, feel free to join the Telegram page through that link. So in the next 30 minutes, I will run us through what I've seen. And of course, being an angel investor myself, being a serial entrepreneur who's formed several businesses in the last 15 years, we will be sharing from the wealth of knowledge, of course, guided by this presentation, about the due diligence that you need, especially as you begin to invest in early stage startup companies. This is big, this is critical, and it's not checking about due diligence is the nuance that you need to consider in this part of the world is across all climes. I know the boss thing now is about people doing raises, priests, and all that, and it's the boss thing, and everybody's scrambling around to be a part of it and all that. However, for you as an investor, for your buck, whether you're an angel or VC or as the case may be, or you're just somebody who is enthusiastic about it and you want to be a part of a crowdfunding platform or whatever the case may be, what are the due diligence that we need for investing in startups? Okay, so right to this evening, we're going to start with the basics of due diligence. And as you have questions and concerns, please feel free to drop that in the chat box, and we'll take that at the last quarter of the hour. The next slide. Next slide, Blackstone. In the world of startups, the term due diligence, when you hear it, refers to when you're fact checking. Okay, you're auditing a company. That's to say, you know, in order for you to double check, you know, the realities, to double check the claims, to check the possibilities. Just a second, because you look at the opportunity that is presented to you. And that's what I mean by due diligence. So you're checking the liabilities, you're checking the deficiencies in light of a planned transaction. So a transaction can be an investment, can be a merger, can even be ability for you to want to do business with them, can be an opportunity for you to want to go into a business relationship. Due diligence is critical, okay? And that is one of the fundamental activities that we think is recommended before we go into any transaction or go into business, especially related with startups, because quite a number of people who want to put their investments in startups have no idea about how technology works. Due diligence is a critical part. The next slide. And what does due diligence offer? It's a systematic way for venture capital firms, angel investors, friends and family to analyze and vet startups in order to mitigate uncertainties. I mean, so that to a large extent the claims are what it is. It helps you, mitigate the risk that is inherent in the business you want to invest in, and increases your upside of being able to earn a decent return or being able to get the required anticipated desired ROI in the venture or in the entity you desire to invest in. So the way you will want to hire an employee, for example, and you want to have a reference check, and you want to check, the background and all that, is the same way you need to do for organizations, such that affirmations, claims, and warranties are what they say they are. Okay, so that's one of the reasons why we do due diligence, and so it's a systematic way for you to double check the claims and expectations, so that expectations of all parties can be well managed. The next slide. So most investors, okay, are to a large extent extremely experienced and well versed in the process of building and growing startups. And what we've seen, and I think even in our client, is that most of the people who end up being angels, who end up being VCs, are usually people that have built successful startups, who have made money from their startups, who want to give back into the ecosystem, who want to help other startups, other founders to scale up. Okay, and so we see that for most investors, they're experienced in the process of building and growing a startup, and will not be only and not only will be able to point out what your startup deficiencies are, but can also help you address them. And so while the due diligence process might be considered as tedious, might be considered as painstaking, for some, they even consider a bit, I've seen a few people take exceptions, okay, and feel very uncomfortable about due diligence. It's important that we are able to subject ourselves to this. At times, due diligence sounds like a bouncing board. It makes you check your reality. So even though it looks as if to many startups, it looks like an intimidating process, I think in actual fact, it helps to build and helps to improve the ability to attract the right kind of partners and investors into our organization. So my recommendation is supposed to be what every startup should love to expose themselves to. I remember one of my mentors used to say, feedback is a gift. And so when you do due diligence, is a feedback, not from the market, because feedback at times from the market can lead to your demise, okay, as a startup, but feedback from investors, partners, and people who are interested in your startup, most times is a welcome development, is a bouncing board, and is a gift. Next slide. Okay, so due diligence will offer an impartial, detailed assessment of where your company is. And like I said, it's a feedback. It's like an appraisal of how you're performing, or how you're seen in relation to the opportunities around you, how you are maximizing that opportunity, what should you be doing differently, what's the perception about your goods, your services, your organization, what's the equity that you have built, what's your track record. Okay, so to a large extent, it offers an impartial and very detailed assessment of where your company is. Okay, and will give the startup a good breakdown of its strengths and weaknesses. It's a feedback mechanism. Yes, it's important for the investors. It's important for people who want to fund you. They need to be sure that they're putting their buck for where they're getting the highest returns. But much more than that is the fact that it gives you the right feedback mechanism that's unbiased, okay? It's very impartial, and it allows you go through a process of rigor that helps you see where the weaknesses are inherent in your system and where are opportunities that you're missing. So I think if definitely we know that for you to get people interested, whether from your elevator speech or what stage you're in, putting their buck and trusting you with their investment, then it's better that you have a realistic and impartial opinion of yourself, not what you think. Because as a founder myself, a serial entrepreneur, most founders' dilemma is that we are extremely optimistic about the opportunities and the chances of our ventures. And it's only normal, okay? We're very proud of what we're doing. We're proud of the chances. We're optimistic about the opportunities. However, we need this feedback from an impartial and an unbiased process, and that's what due diligence does. Okay, thank you. And so, things you need to do to be ready for due diligence. When you're a startup, whether you're at your pre-seed, your seed round, or you've even tried to do maybe your Series A, what are the things you need to do to be ready for due diligence? What is it? People want to see that you understand your market. Do you understand exactly what the market is? And I talked about the opportunities, because in your market, you're looking at both the context and the size of the market. And so we're looking at the opportunities in your market. Okay. The next is people need to review your documents. I've been part of several due diligence. I've been part of several funders talking to me and trying to get background checks about some startups I've invested in. Some have relationships with, some that have listed as referrals. And of course, the other thing is to check your documents. Quite a number of startups, and we've seen so many challenging news filter from even some unicorns and all that about documentation that needed to be in place to operate. So for you to go for due diligence, the investor needs to be sure that you have the right documents. I mean, the right documents is, and there are quite a number of them that we take for granted. We're talking about partnership agreement, term sheets with founders and co-founders, because basically when you look at the framework in which you want to assess or evaluate every startup, most investors at times look at the framework of agreement of the board. And so they're looking at people, okay? They're looking at what do you have, a POCD framework. What do you have in terms of your people? What's the agreement with your people? Who are the co-founders? Who are the promoters of those business? How do you guys come together? What is the shares? What's the, under which terms? And those documents are critical. Do you even have previous investors that you've taken funds from? Or do you have obligations? Do you have So those documents are critical, okay? And of course, these are based on relationship, and that's where it starts in terms of your people. The other is in terms of course, people look at opportunities. They review in terms of opportunities in the market. The other thing you look at is the context. And context in here, they're looking at what are the regulatory frameworks in which you play. And it's on that regulatory frameworks that we speak about the issue of reviewing your documents. Do you have the right permits? Do you have the right licenses? Is your organization even incorporated? Do you have the right tax documents? Do you have what it takes basically for you to transact the kind of business for which you say you're transacting? And basically, this is very critical for investors in startups because, as we all know in the ecosystem, legislation lags innovation. Legislation always lags innovation, which means the market most times, the ecosystem most times, innovates faster than legislation or framework or structure that supports or creates the ambit for which they could operate. However, you need to make sure that you have the requisite documents that provides the right protection for the kind of incorporation or the kind of business that you're in, that helps you mitigate the downsides that you could come, that helps you ensure that you're not breaking the law and that you're not doing things that are contrary to your incorporation in terms of what are the terms of your incorporation and all that, and that you're even incorporated in the right jurisdiction, that you're incorporated in the right place that can allow investors' regulations or investors' terms to be able to work out or to become favorable. So these are documents that they want to check. So every single document that improves your chances or gives comfort to the third party investing in you is critical, and these documents will be reviewed. The other thing is, I talked about the size of opportunity when I talked about the POC concept in which is being used to evaluate a startup. You're looking at the people. People make a business. Investment is into people. People invest in teams, not in individuals, okay? That's critical. People don't invest in products, they invest in people. So the first thing is, who are the people, who are the promoters, who are the guys behind this? What does the team look like? Who are your co-founders? And what is the relationship, the term sheet that binds you guys? Critical. The next is the opportunity. How realistic are you to the opportunity, okay, that you have in there? What's the size of the opportunity? Like someone said, is there a gap in the market? But much more than having a gap in the market, is there a market in the gap? Is it worth investing into? Is it worth venturing into? Is it worth promoting? Is there going to be an ROI? Is there an upside to all this? What's the end game, okay? So investors need to be sure that you're realistic. But before they do that, you need to have captured that in your pitch document. You need to have done the right research showing what is the size of the opportunity, the upsides, and the possibilities in there. And of course, they need to be sure that you have a realistic view of not only the size of the opportunity, but how much work you have done. We talked about the valuation of your organization, where we are, what's the realistic valuation, what's the realistic discounted cash flow that we're able to make, what are the returns that we can bring to the table, how much of the market are we able to capture, how much of this opportunity are we able to convert into business, and those are the things that go into your valuation. It's looking more around how much of these so-called opportunities out there are you able to capture and are you able to convert into tangible value that people are able to pay for and exchange for. So those are critical things that needs to be demonstrated when people do due diligence. So it's not just enough to have a company and say, I want to be in fintech or insurtech and all that. Question is, do you have the ability to capture value? So there's opportunity out there, but much more than the opportunity, can you convert that opportunity into value, and can you capture value and create an exchange for that? That's what investors want to see. And of course, it can be time consuming. You need to dedicate time to due diligence, because you'll see quite a lot of reverts and asks and clarifications. At times, like I said, can be quite an intimidating process for startups, but we need to be quite open to it. It's a bounce on board. It's a feedback, okay? And for as many of these due diligence we can go to, the more we learn. In my opinion, from every due diligence process you go through, you learn something new, especially when you're having due diligence being done on your startup or on your organization by different parties. Everybody comes with different lenses to give you some feedback, and all you need to do is take that feedback as a gift, put it together, and make sure you're able to see a common thread, and then you can be able to proceed on that. Thank you. The next slide, Tito. So, most important questions. Most important investment decisions, making factors for VCs. So when you see VCs and people who want to invest, what are the most important? Okay, and I think I said this in the previous slide before even getting in here, okay? Down in there, people always think that valuation is the biggest thing. So my company is worth this and the valuation is this. I'm sorry, that's not where people start from, or that's not the topmost in the criteria and the priorities for VCs or investors or angels, okay? So yes, we see valuation, only about 1% of it. Ability to add value, which means they look at, am I going to add value to this? Is it a sector in which I have competence, I have experience? Do I have other organizations in my portfolio that are complementary? Do I see something in this? What value do I bring to this game? So they look at that, okay? I'll be 12%. They look at the sector. Some are sector agnostic, and so they work in virtually every sector. But for some people, they are to a large extent specific about what sectors they want to play. So they're just not open to all sectors. So the first is they need to be sure it's a sector they understand, they played in, they invested in, and they quite understand the structural analysis of the industry. Every industry has its own structural analysis, the way it's structured, margins, everything, the growth, the opportunities, the tangents, the verticals in it. It's called the structural analysis of the industry. So they want to be sure that they understand it, okay? And basically 60%, they need to understand the market. So what market are we playing? So apart from the industry, what market? Do I want to play in Africa? Regional markets? And all that also, for quite a number of them, they're specific. Some, like I said, it can be agnostic. I want to be in every market. Some people are very specific. I want to be in Sub-Saharan Africa. I want to be in the African market. I want to be in Europe. So people are specific about what they want to play, the nature of the market, the size of the market they want to play. And of course, some other people, another 10% look just as the business model. Okay? 10% of them look at the model of the business. Is it unique? Is it innovative? Will it disrupt? So they look at that. What are the chances of this model giving us a lot of upside? Okay, and quite a number of them, 13% of them are looking at the product. So we see that product is not, I see every day, pitches being sent in, pitch decks and all that, and people are so excited and talking about their product, and they assume, automatically, and they assume automatically, but actually, can you increase the slide so that people can get to say it? So people just assume automatically that the minute I have a unique product, then everybody's going to jump into it. Only 13% of investors are excited about your product. Bolatito, can you expand this slide a bit so that if possible, I see comments of people saying that they can barely see the slide. So it will be exciting to expand the slide a bit so that they can see the other priority. Okay, and then apart from the product, then the next part is they're looking at the product market fit. Is there a fit? Can I see the fit? Have you uncovered the fit? So they want to be sure that there's a fit in there. I see so many pitches by the virtue of the work I do. I mean, running an enterprise development center, co-innovation center with startups and all that. The question for so many people is, I want to be sure you have got a great product, but is there a fit with the market? Can we see the complementary nature of your product to the market? Okay, so 30% of them, 13% will look at your product, 40%, the larger percentage, want to be sure that there is a fit. However, almost half of all investors are concerned about the team. Almost half of all the investors are concerned about the team. And I did mention in a slide before now, people do not invest in individuals. They do not invest in products. They do not invest in organizations. They invest in teams. They invest in people. Your ability as a startup to be able to get the right people, the right structure, make sure that the right term sheets. We've seen organizations where people do the first raise and co-founders exit or retire and all that. What is the plan? What is even their shareholding? What's your retention strategy? So people want to be sure that you've got a solid team. What's their experience? So when we're looking at the documents you need to present, you're looking at even the CVs, the profiles of these teams, okay, that you have. Who are the key principal actors in there? The principal partners and team members who will be driving the agenda. They need to be sure. And who are there? What's their track record in promoting an enterprise such as this? So that is important. And half, more than half. And that's why I think the ability for startups to know that much more than ability to code or to build a product, how to lead and manage teams, that ability is critical for startups, not only to attract funds, but to scale up and achieve commercialization. So half of investors want to see the contract, the term sheets, the agreements, how you work, the shares allocation. Do you even have shares reserved for future employees? Those conversations are part of things that they want to see in your due diligence around your team. The next slide. And so important qualities in management team. So drill down. So if half of them are looking at your team, what exactly do you want to see in your team? Okay. What should I be showing? What should I be putting out there for my team? If my team is really what they need, if half of them are saying, guess what? You are super smart, but I'm sorry, I can't put my money behind you. I can't see the team that will deliver this. I can't see the team that will capture value, that will turn this huge opportunity I see either in your environment or in your market, turn into a value that I can be able to price appropriately, okay? What do they want to see in the team? Industry experience. I do remember I used to have, I was promoting an enterprise at the time, and I had a co-founder come in, okay, who had mandated to get a COO to help with run operationals. And they brought this guy into, wanted me to sign off on the recruitment of this guy who was supposed to be like an EVP, but he had zero understanding of the ecosystem, zero understanding of the industry of play, zero understanding of how the company was going to be run. The only thing is that he says he's worked in other sector and all that. And you know, industry experience is a critical part, okay? 60% really think in terms of weight, it is important. I will vote 60% of everybody will say information I want to say about your team, industry experience is critical. It's critical. They need to have an idea and an understanding of the nuances of the industry. That improves their chances of capturing value, improves their chances of creating or maximizing the opportunities in the market or exploiting the gap in the market, okay? The other thing is, how entrepreneurial are they? When we say entrepreneur, we're not asking about your ability to be able to run a company or start a company. There are features in an entrepreneur that are critical. And that's why you begin to hear the word called entrepreneurial activities. So entrepreneurial experiences are looking at ability of them to have demonstrated strong level of ownership, led teams, taking initiatives, taking decisions. So entrepreneurial experience you're putting together does not necessarily mean that they've founded something themselves, okay, when we're looking at management team. But have they been at the place where their decisions had far-reaching implication on either their teams or organizations that they've led before? So you're not looking for people who have never led teams, people who have zero experience about ownership, about motivating, inspiring, providing leadership, influencing people, galvanizing people to get a result and rallying them around a common goal, which are the entrepreneurial skills for success. If you do not have people that have that, then there's a concern around the management team you're putting into place. The other is the ability. Can they deliver? Can they deliver? So I've seen quite a number of people share about efforts. Effort is fantastic. Effort doesn't pay the bills. Investors don't want to see the effort. Can they deliver? Can they execute? That's what we mean by ability. Can they deliver? Can they execute? Have they delivered before? Do they have a track record of performance? Do they have a track record of executing? And those are critical things that yourself need to also check as you bring in partners, leadership team, and founders. And the other one is, what's the chemistry around the team? I mean, you can bring the team together and have a chat with them. And in 10, 15 minutes, you can see how they relate. And you know if they've got a chemistry, how they work together as a team. And finally, are they passionate about the problem they're about to solve? How passionate are they? Are you? Because the minute you're not passionate about what you do, then you switch on your hustler mentality. Investors don't want to give money to hustlers. They want to give money to people who want to capture value and create shared prosperity, not only for their staff, but also shared prosperity for the investors who are putting their buck in there. Are they passionate, okay, about what they want to do? And these are probably things that VCs want to see. Next slide. Okay, and of course, we're looking at segments. I know. So again, I did mention that this slide, this presentation, along with all the other about 89 episodes, you'll find in the link that has been dropped in. That's ecoicenter.com. So I know that some of the visuals might be a bit tiny, but you can always get it at the end of this, and then you can drip. But I think just follow me as I try to expose a bit on this. So what are the other informations they will want to see? What's the corporate information incorporated in which? What are the documents? What's the financial information? Okay. When you make warranties, you need to make sure that those warranties are backed with facts, not opinions. Investors don't invest based on sentiment or on your opinion. It's backed with facts. What are the financial information? Operations. How do you operate? Can they check it? Can they see your platform? Can they take a walkthrough through your platform? Okay. You want to see what's your customer supplier contracts, the people that are supplying you, and what are the partnerships, what are the deals that exist, POCD, the last part of deal of these, the deals that exist is the deals that, whether deals with financial partners, whether it deals with investors, whether it deals with suppliers, they want to see those deals, okay? And, those deals are critical, and that's what they refer to basically as your supplier contracts, okay? Okay, and they want to see that. The other thing is that they want to look at the technology. What kind of technology do you use? What's the technology platform you're running? And how the technology change? What value is it bringing? Is there any intellectual property that helps your valuation? Are you laying claim, and have you properly registered or captured any proprietary technology? Is there something that's proprietary to your organization that will give you an upside and give you a better fighting chance as you go to the market? What are your IT systems? What are the employees? What other assets do you carry on your books from properties and all that? How have you mitigated risk? What control process do you have to mitigate risk? Insurances, okay, fidelity guarantees. What do you have to mitigate all the risks that are likely to crop up for startups? As a young organization, do you have them? And they're checking for that. They want to check them in their due diligence. They want you to update them. They want to verify that, okay? Regulatory. How are you regulated legally regulated based on the sector you are in? What are the regulatory approvals that you needed to have and that must be in place? Okay, do you have the right licenses to practice what you're doing? Okay, and those are critical parts. And then you want to see your tax compliance, because nobody wants to come into a place and work in an organization that is either evading tax, and because once you invest, everybody becomes liable along the line when things crop up with tax. So these are 12 critical cardinal points. That's diving deep now of the minimum acceptable number of documents that due diligence wants to see at these 12 we have listed. Corporate information, incorporation from CO2, from CA7. Are you incorporated here or which other jurisdiction? What is the relationship between the ownership and all that? They want to see that. Financial information, operational information, customers and supplier contracts, technology, intellectual property, IT systems that supports what you do, your employees, your properties, that's assets that you've got on the books that help to facilitate what you need to do, okay? Insurances that edges against the downside, regulatory framework, and of course, taxes. That's are 12 critical information that are critical for everyone. The next slide. So don't assume as you go into your due diligence. Okay, at the end of the day, the most unlikely group may come true for you, and the most unlikely investor may disappoint. Okay, so until you have put everything together, give it your fighting chance. Okay, never assume who will get over the finish line and make a commitment. You just never know, and never take for granted any of those cardinal points or any of these things we've said, because you never know which one is a big red flag. We've talked about how people have rated things. Some people said, oh, your valuation is only 1%. Some said it's the team. But you might be talking to somebody who valuation is the critical part for them and the team has not come, because it's not 100% of them that said teams are the most important. So you just never know, never assume, never take for granted. Make sure you put in everything that is needed. The help of the investor might come from the most unlikely source, okay? And never assume you are done and that you have identified your group of investors. You just never know. It's like you throw yourself out there as a pretty bright and people come in. You have to keep pursuing new prospects up until the day you close. As inevitably, someone will get a hiccup and back away. Leave no stone unturned. And we've seen quite a number of that. People who back away just as about you're crossing the finish line. Anything can happen. Any comp will get a trigger. Any comp, could flag a red flag. So make sure you're pursuing all the prospects and you never back down. The next slide. So never give up on, an institution who says no. And I've seen it happen so many times, even for myself, as I do quite a bit of investing also. There are times it's just not the right time and it has nothing to do with you or the opportunity, but don't give up. If somebody has said, not this time, I'm not ready, there could be a bit of some commitment. There could be the bandwidth of the funds they need to invest at that time in that sector part time is exhausted or for whatever reasons. Don't give up on them. Keep providing them with up-to-date data and items of progress to keep them informed, as you never know what will persuade them, or perhaps when they will say no in the first place. And this is one of the things I find quite troubling with quite a number of startups I even have invested in. Ability to provide up-to-date information. When investors are not, you need to mark investors on your newsletter. You need to throw it out all there. It's not good enough for you to have it on your Facebook, on Instagram, on LinkedIn. I think they're just following you. You need to be deliberate about curating a potential investors directory and update them as you move on. It's just mark it. Just mark it. What are the new milestones? What are the new things you've done? What are the new progress? And make sure that as you have those milestones, you mark them. You just never know who turns around, okay? And that is critical as you go through the process of wanting to get investment the next time. Always, but always ask the following questions before you leave the first meeting. Do you actually have money to commit now? If not, when? I mean, so just like you find it on both sides of the coin, we have jokers on both sides, okay? You need to be sure you're not wasting your time with the wrong person. What is the due diligence process and how long will it take? You need to ask so that you're not wasting your time and committing yourself to what is not going to happen. It can't be forever. How will you finally make the decision? And that's why we've taken you through those 12 documents they might need and how they wait, so that you know it's not an ambiguous process. How will you make your decision? If you were to commit today, what will be the range of your commitment? 100 to 200,000 a year. What's the size of the ticket? Is what we say in our parlance. What's the size of ticket you're willing to commit? Is this a small ticket, average ticket, big ticket, $50,000, $10,000, $100,000? Do you do a million? There's a size of ticket for every kind of investor. You need to know the kind of ticket, and you need to ask. You need to double check. Understand who the point person in their group for follow-up, and decide who is most appropriate in your group to follow up. Make someone responsible. You need to have that. I've had at times people go cold on conversations with me. I mean, yeah, at that point where you're deciding, taking a second look at the team, and people go cold and they come back after 18 months. You've moved on to new opportunities, okay? So make sure that there's actual follow-up. Somebody's responding, somebody's tasked. You need to keep those leads hot at every time. Don't allow any of your leads to go cold. The next step. Okay? Listen to what is said and keep extensive and accurate notes. It's a feedback, like I said. It's a feedback. It's a bouncing board. It's a process you should go through, and it's an unbiased process that helps you understand your strong weaknesses, how you're able to capture opportunities. So keep the notes, take the feedback, take the learnings, and seek as many of those opportunities to go through due diligence. It will help you the next time. And always ensure that you have a well-organized follow-up process. How do we go? What's the next step? Do you follow up after 48 hours and all that? And don't wait for anyone who says they will call you back in 2 weeks or a month to call you back. If they've told you in 2 weeks, follow up. Ensure that, because some of those due diligence we talk about and some of those nuances is all about this ability for them to ensure and get confidence that you can actually capture value is around this. Different people have their different nuances and their processes. Make sure they said 2 weeks, you follow back. Okay? Because there are several meetings that you will have, like yours, several commitments, and of course, some of these things slip through the cracks. Make sure you ensure that you are not forgotten the next time. Prepare in advance. Okay? List all your companies, CEOs, co-investors, personal references. You know, a red flag at times is, yes, I mean, try not to give wrong answers through due diligence, but when everything you say is, can I get back to you? Can I get back to you? Can I get back to you? Is a potential red flag, okay? Make sure you are fully set with every of the references, all the emails, telephone numbers, collect all of your data on each company in your portfolio and everybody that you relate with. Anything that you can do to make it easier for a potential investor will accelerate the process or may even get them started on due diligence sooner. Make sure everything is there. Just be set. It can be on, informal meetings that translate into a due diligence that start. Just make sure that you have everything ready to be pushed, to be shared, to be discussed, and to provide the right information that is required. When you keep coming, oh, can you give me some time and all that, most times is a put off and a red flag for most investors. They want to be sure you're on top of your game every time and anytime. The next slide. Don't believe or be discouraged by stories you hear about other groups raising money who have done it faster. Okay? I think the paths are different. The journeys are different. Stick to your journey. Be focused. Most times, people throw those things out there. Just stay focused. It may take you a bit longer, but it might also be the right process. Investing is also like getting into a relationship. You want to be sure you're in bed with the right kind of people. Okay. So if it's taking longer, don't be discouraged. Stick to it. Okay. Focus early on to get the lead name investors that others will respect and follow. There are some investors, and it happens in every sector and industry, they're opinion leaders who people trust. Okay, to ensure that you have such people and follow up well with them. Even if they've not invested, the fact that when people bounce it off them and they check with them and they've got very favorable reverts about the engagement with you, it helps open doors and helps sway people who are undecided. Okay, the next slide. Okay,
Yeah, that's the last slide, sir. We have a few questions now.
Okay, so we'll jump to the question. I think I already see a question on Emit in here on our dedicated platform. What are the essentials you must know and do before due diligence? And those are part of things I've shared. So all I have presented today are the essentials you must know and you must do. Knowing the areas, knowing the documents you must have, and all the process. If you have missed this presentation, please check it again as you go to the series. You need to follow it. You need to see the point. You need to see the weight, see the things that are interesting to investors. You will find it in there. Make sure that you take the pain to go through them and that you tick them off. You know, it's like I mentioned the 12 critical information points that you need to have. Make sure you have your documents supporting all that. And I shared also the things they will need to check in terms of your team and all that, and what are the other things. So you can always go back to this presentation and go back to this recording for more in-depth knowledge. Should you, however, require a deeper understanding, a deeper context, just drop information on the TechBiz Nation, which is our networking session or forum on TechBiz, where we should be able to share a bit more insight, much more than this, address the question to any of us in there, and we'll be able to give you a better context on this, but I've shared a couple of that earlier. Question 2, how can startups from other Africans receive support and funding if they're not necessarily based in Nigeria? How can startups from other African countries receive support and funding if they are not necessarily based in Nigeria? I've had people reach out for me from Cote d'Ivoire, from Cameroon, and I'm sure quite a number of our angel and venture capitalists invest in other places, in other startups outside of this place. Like I said, when you look at why they invest, they look at some criteria. Is it complementary? Can I add value? Can I add value? Why are people in other clients coming to invest in the startups in here? Because they see that they can add value. So yes, how can startups from other African countries, if you've got a good play in your startup and there's a good end game that investors can see, if you share your deck and you pitch, I can guarantee that you will see support, you will see funding. That's part of what we do. Most of what we do, even in co-innovation, not only about what happens in this client, even in other clients, like I said, we try to help and provide the right context and even link with investors in here. So feel free also to be able to check up the Tech Nation and see how you can be a part of that, and also in that's TechBiz Nation, and also download some of these presentations and see how you can be a part of that. It will be there, and I think you can always quite a number of resource persons that we have in house. Like I said, our facilitator had a logistic challenge. He can always provide a deeper context for you, and he's provided a lot of opportunities. He's one of the founders of. He's a founder, rather, of Funding the Gap Alliance, and I think they do quite a lot of work around this. So these are the resource persons that you can have opportunity for, and these are part of the detailed points that he has curated for which you are able to learn and be equipped. What are the best platforms to meet? Okay, what are the best platforms to meet and engage with investors? Several of them. Several of them. And like I said, when you follow quite a number of people, I think at the end we might drop the email. I think, Bola, if you have it, you might drop the email of Shegun Cole. I find him as a very relevant resource person and who's done a lot of work in this space, and you will find him relevant. I think, in my own opinion, what I tell startups like coaches, join fellowships, okay? Make sure you are in the ecosystem. Make sure you have the opportunity to network. Join an accelerator, apply for an accelerator, join a fellowship there. Quite a number of them happening around. Once you join an accelerator, join an incubator, apply for a fellowship, it's always an opportunity, because when you go through this process and people help you with some of the things we've talked about, the feeds and all that, the chances are high that you're in the right environment for which you can meet investors, you can meet people who are interested in what you do. Okay, and so I will encourage join programs, join incubation programs, join accelerator programs, join fellowships. Be part of the ecosystem. You can't get hold up where you are and think investors will start looking out for you. I mean, they see thousands of pitch decks every time and several presentations and meetings, okay? And that'll be important. Bola Tito, from other platforms, are there other questions you want to share from other platforms which can be relevant to our audience for today? Questions on Facebook, on LinkedIn, on... Yeah. Hello, sir. What would you advise a startup when an investor is ready to own 40% of the stake of the startup? Controversial, okay? But it's a function of so many things. And that's why I think one of the things we should also talk again about is, this investment readiness and how to look at term sheets and all that. It's not a one size fits all. The question is, what are they bringing to the table? How much stake are you willing to put out there? What's your current valuation? So there are quite a number of criteria that determines what the investor is bringing to the table to have 40%. If you have not done a critical analysis and gone through a due diligence of the value and the value the person is bringing on board, 40%, 50%, 60 or 100% is neither here nor there. It's a function of what is the value this investor is bringing to the table, and how have they been able to determine that number 40%. There must be a scientific basis. There must be a logical basis around that. Okay, so it's not something I can say who is right or wrong, but also as entrepreneurs, I think along the line you should know that based on the stage you're in, you get diluted as you bring in so many investors. And I think if you're a very early stage investor, giving out 40% of the especially around pre-seed, seed round of the company has its own downsides, because you get diluted more and more as you take other rounds. So, but it's a conversation that you need to provide a deeper context for one to be able to help you and guide you in this. Okay, how does an early stage? Okay, I think. Sorry, I think I have. Good. So I think. Oh, beautiful. I think. There's also a feedback from our facilitator, that's Shagun Cole. Oh, he's in the house. That's great. He says also 10 to 25% is the standard for early stage. Okay, so he's also speaking and saying 10 to 25%. I think 40% is also on the high side. So it's about 10 to 25%. That's the rule of thumb. And so you might just double check that and be sure that that is the relevant side. I mean, like I said, at 40% for early stage, it's a big concern. How does an early stage startup carry out a proper valuation before reaching out to investors? Okay, I think there are firms and organizations that do this. We can drop a few of those pointers to you if you are part of the TechBiz Nation. I will get Bola Tito to curate a couple, and they can do that, because you need to have an independent valuation of what you're doing. It's not what your pitch deck says. You get quite a number of people do it at a small fee, but you need that. It helps you know what you're doing. And even for some investors, should people want to invest before you've done a proper standard valuation, there's something we call a safe document, which at times for early investors, a safe document is a contract where it gives them comfort that they're investing at this particular stage, but by the time you do evaluation, their investment will convert at the appropriate value based on what your outcome is. So even if you've not done one and you need to get, some investors will come in if you're able to come up with a proper safe document. However, you can always find, we'll curate a list of you for you of people who can help to do that, and we'll drop it on the TechBiz Nation. Okay, does that work? So I think that is it. We've got 2 minutes to go, but keep your questions pouring in on all the platforms. I will from this switch onto the TechBiz Nation and be able to take more of the questions and provide feedback. But we've always committed that we wanted to make sure that TechBiz runs once the last Thursday of every month between the hours of 5 to 6 p.m. And we're trying to be very religious about that, just so that you can plan your calendars, you can diarize, and we can give the right value, the right support structure to startups in the ecosystem, tech enthusiasts, or people who are planning to venture into the business of tech. Okay, I think we will be drawing the curtains at this point, and I do hope you had a great session. Even though I'm sure we will be bringing back Segun Cole, definitely back on this platform. I can guarantee he will be coming back later on. He joined us, I guess, while this was ongoing, but he will be coming back. And I think what we're going to have is maybe a roundtable chat, more like a fireside chat with him, where it's not going to be him taking you through the slides anymore. It's going to be him answering just all the questions. So let's curate the questions together, and I think we'll come up with a follow-up of a fireside chat where myself and him will be able to ask him questions, and he'll be able to provide a lot more deeper context of what can happen around due diligence and how that works. So I think this is an important part. And thanks for everyone, we've not taken for granted, everyone who has been a part of this TechBiz series. Like I said, feel free to go to the link which my colleagues have shared. You'll find all the 89 recorded episodes of TechBiz. We've had 89 outstanding facilitators, I think 89 thereabouts, between 89 and 92, who have graced this platform and spoken about all aspects of tech that is relevant for startups. All you have to do is go to ecoicenter.com/TechBiz, and you'll find all of it there. Download, view, listen, and all that. Should you have comments, then use the link which has been dropped in across all the platforms to join the Telegram group and ask your questions in there. Most of the facilitators, incidentally, also belong into the link. So feel free also to join that link, and we will have people like also Segun Cole and so many other people who are able to provide the right support structure for you. And we do not take it for granted. I think the link has been dropped for quite a number of you that have been part of it. It's on the hour. Thank you very much for Segun Cole. He's an investor and co-founder of EcoCab, and he's done tremendous work in this context. He's been able to provide document the slides, provide the context. Those were significant research work he had done in that presentation, which has slides shared with us, and I provided context. The link, I think the link has been dropped, but it can be dropped again. Folake is asking for the link again. Just scroll up, you'll find the link in there. The link for Eco Eye Center, please drop it again. My support team, drop the link for the webinar. Folake is asking, and just up there you'll find the link for the TechBiz Telegram page. And like I said, Segun has done tremendous work in providing this resource for us to be able to engage and converse today. And I'm sure, I'm committed on his behalf, he will be coming back on TechBiz Fireside Chat, where we will have all of you. And on that Fireside Chat, all you have to do is ask him questions. We should have dissected dissected all the questions and all that. And we think he will come back and he will have a fireside chat and be able to speak to us and help us. So thank you, everyone. I do appreciate all of us that have been on the call, your questions. Eco Innovation Center provides the platform, or facilitates the platform TechBiz webinars, and our TechBiz series comes up every last Thursday of a month between hours of 5 to 6 p.m. And of course, Eco Innovation Center is an incubator and accelerator center dedicated to helping startups and organizations that have technology at the core of their operations achieve scale and commercialization by providing the required hand-holding and support structure for them to be able to achieve this. Eco Innovation Center is set up at 50 Awolowo Road, from which we reach quite a number of ecosystems and people all across the globe. We have thematic areas, and you can see quite a lot of that when you look at our website and see the areas that we come in. I remain again your host for TechBiz. My name is Victor Benga Folabi, the founder of a co-innovation center. Thank you for keeping a date with me, and I look forward to having you again next week in September, when we will be sharing again some exciting insights and providing informative and nuggets that will help you in your journey to achieving the organizational startup of your dream. Do have a great evening and a great weekend ahead. Thank you very much, and see you next month.